US Fed hikes now have us higher than pre-GFC. Data dependent? It's a good question. Hi, everyone, and welcome to another episode of Insights brought to you by Ainslie Bullion and the Gold and Silver Standard. Today, we welcome back Sam, who's been looking at the data that came out overnight. So we had that Fed decision come out overnight, the impacts that's going to have for us all, and more importantly, what is underlying that decision, those data that they are actually looking at. It's a really good spot to start looking at. It's one that sort of got me a bit fired up this morning when I read what Sam had written. So how are you going today, Sam?
Yeah, great. Looks like another early morning for us with the
Well, particularly
FOMC.
you, because I know you get up there and you like to watch it in real time to be absolutely on top of it. So what was that, 4:30 this morning?
Yep, 4:30 was the press conference, which is the one everyone watches.
Yeah, wow. So lots to talk about today, actually. But even though it was sort of a predicted result, really, I mean, no one was really that surprised by the actual decision. But all eyes were on the press conference, which is, like I said, you got up early to watch it. So why is that such a focus for yourself and for traders and investors generally, do you think?
Well, interest rates didn't used to be, such a popular weapon. They didn't used to be the only thing people watched, and some dramatic, cuts and rises weren't. It's not the normal thing to do. What people should be focusing on is things like GDP and actual productivity in an economy, not just solely the tools the central bank uses to try to stimulate. But it's gotten to the point now where that's pretty much the only thing people look at. They don't focus on a lot of the core metrics. I mean, they look at employment rate and things like that as well, but mostly just to see how the Fed's going to react to it. So in this case, the press conference, like you said, this was basically priced in. But at the press conference, you get to, there's more there. It's not just a number. There's a statement of what you can see, what they're trying to do, get an idea of what they're going to do in the future months, because it doesn't matter if, for example, they said, oh, we're not going to do anything this month, but we'll raise 10% next month, or some dramatic thing in the future.
Yep.
That's why everyone in the last couple of years especially has looked out for the press conference even more than the actual interest rate decision.
And that's such a good point, because I hadn't really thought about it, because we get so caught up in these decisions lately, but it kind of does seem a bit strange, actually, to be so focused on what the Fed is going to do with interest rates. But then, it's not even looking at the interest rate itself so much. It's looking at anticipation of how they're going to respond to it. It's so convoluted and doesn't really make sense, when ultimately you'd think you'd be looking at more concrete things like how the economy is actually doing. I suppose that leads to my next question. So if the Fed is claiming to be data driven, so you would like to think that they're actually looking at what's going on in the economy, but not necessarily. And you make some good points in the article about, what they're actually looking at is quite mind blowing in some ways. But can you actually break down what this idea of data driven might mean and what the Fed is actually claiming to be looking at the moment?
If you look at the technical, the first thing I'll do is I'll look at the word they're using, data. Now, data or data, what this means is just raw, raw numbers, just not put in any sort of organization. After you take data and you put it in a formation, it becomes information. Now, that's what they're doing with it. They're not doing anything data driven. They're doing information driven, and the information they're using is not just information, but it's very specific pieces of information, then put on a sort of weighted average, and that just ends up becoming essentially a fabrication. So the word data is a very interesting word to use for them. They're looking at things like the CPI and the employment rate, but mostly they're looking at CPI, which is that basket of goods, which if you go to the supermarket, for example, you can see that some goods have gone up a lot. If you go to other places like the petrol station, or you look at your electricity bill, you can see that the price of things have increased. Or if you work in construction and you look at things like lumber and steel and all these items, you can see how inflation's going, how it costs, the cost of goods has gone up. But it's very interesting they use the term data driven as if they're not cherry picking. data points,
Yeah.
making it into information, and then further putting that through filters of things like, weighted averages to get the result that they want.
And I'd like to drill into that a bit more, because that's the part that really I found quite frustrating in reading what you're talking about today. This idea that I love your terminology there of information, like how they're putting it together, because CPI is one they're definitely using. Like they talk about the CPI a lot, but we keep hearing new terms come up for CPI. So it's not necessarily what we traditionally would have thought of. Now it's like, oh, what we're actually measuring is core CPI or super core CPI, or these new terms that we hadn't even heard of before that now become, we're making our decisions based on this. And you go, when you use the word cherry picking, to me, that's 100% what it is. It's going, well, we didn't like the outcome we got when we used the old definition, so we made a new one so we could get the outcome that we wanted. So do you think this idea of different types of CPI, is that really just them doing exactly what I've just described there, like cherry picking what they want, or is there some sort of validity to it?
It's crazy. It's a very unique type of cherry picking. I think it's more than that. If you look at core CPI, you mentioned now everyone's talking about core CPI. Now, core sounds like a most important.
Yep.
But what does core exclude? Well, it excludes food and energy. Now, how many people do you know who do not eat food and do not use electricity?
100%.
I don't know.
Exactly.
I don't know anyone who doesn't eat. I don't know anyone who doesn't use energy. I'm pretty sure everyone fills up their car with fuel or uses electricity or something. And what's their excuse for this? Oh, it's too volatile. Now, here's another example. Like they use the word data for things going up. They use the word volatile. Now, the whole point of CPI is to measure something going up. Now, if something's volatile, it means it's going up a lot, down a lot, or it's going both up and down, rattling. But why use such a vague term, volatile, if the only direction it's going is up?
Yes.
So what's CPI for? CPI is to look at how fast things are going up. The cost of goods is going up. And then they just say, oh, well, that's going up too much. We need to remove it. Food's going up, energy's going up. These aren't core things that an average person needs, plus they're going up too fast. What's the opposite? They're the things that everyone needs the most. And if you go to the supermarket, you can see pretty quickly that volatile means this direction, up. To me, it's insane. It's like someone watching a race, an Olympic race, and saying, oh, this Usain Bolt guy, he's too volatile, so we're going to remove him. And you say, well, what about second and third place? You say, well, let's remove them as well. And then, okay, well, what do you want to measure? How about this guy in the middle? But first, we're going to take the guy in last place, and we're going to do a 1/3 weighted sort of average between it. At this point, you're not looking at the race at all. You're simply fabricating a number.
And
when you say, I'm going to weight this percent, I'm going to take these 2-3 things and weight them this percent. Yeah, that's a fabrication.
And that fabrication is surely, like anyone would fabricate anything, it's surely for a purpose. And I suppose that probably leads me to my final question to tie all this together today. When you look at those press conferences, the messages always seem to be carefully crafted. Like obviously they're very carefully crafted to the point where we're looking at single words different or added or what is the same to try and infer what's happening and going on here. But do you think they're carefully crafted to make it seem like inflation is manageable or problematic? Like it depends on what they're trying to do at the time. So are they effectively using that conference to just manage the perception around these numbers? It
seems like they're doing both. Because if you think about the detriment on either side is if they say, well, we want interest rate hikes, we want to raise interest rates, but everyone's worried about their mortgages and things like that. How do we win over the population to agree to more interest rate hikes? Well, they could just say inflation is completely out of control. The CPI thing we're doing now is made up. It's a fabrication. Inflation's way worse than we're saying. And okay, everyone might panic and say, okay, raise those rates, tackle it. But what they might also do is run and buy a bunch of silver and gold and just exit fiat currencies. And
which is problematic, right? Like that's a big problem for them if everyone does that.
It would finish the game. So people would take their chips out of the game. And then if they say, oh, inflation's not an issue at all, don't worry, we have it all under control. Well, they already tried that. Remember, inflation's transitory.
Yes.
People only need to go to the supermarket once to see that's not true. Or people who are told, you're a builder, you need to go build this house. Oh, actually, unless the person having the house built pays us double or 3 times, we can't build the house anymore. People are going to think, why is that?
And you just reminded me of 2 things there, like of how when you just said that transitory, which is a really good point, that was a message that we were being fed. This inflation is just transitory, and then the message changed to sticky. It's like, no, it wasn't transitory, it's sticky. So that wasn't over a very long period of time. It does seem like these messages are delivered in terms that everyone can sort of get behind, because you can get behind the term transitory or you get behind the term sticky, but they're all based on made up data anyway. So it really just does seem to be whatever the flavor of the month is of what they're trying to achieve.
Yeah, you can't argue with the term data, because data is unmessed with information, in which this case is not. It is information, and then it goes through so many processes. Yep. It's not data anymore. You can't argue with volatility. Oh, something's going up or down, or it's going up and down. Okay, well, that's everything. What if it's just going up? Because you don't want to say the word, you don't want to say just the word up. That doesn't sound good. And then, you have these other attempts to manage inflation. So you don't want to make it look too bad, or else it looks unmanageable. Everyone pulls out and goes into silver and gold and other things, hedges. And you don't want to make it look like it's no problem at all, because people can obviously see it is a problem. And people have been calling the Fed's bluff for a long time that inflation is worse than expected. So they can't just totally say it's not an issue, because that would be absurd.
Absolutely. Well, it's really not surprising that everyone gets so confused when you look at it through that lens, because there's a lot of double speak going on there. So thank you, as always, Sam, for breaking that down for us today. I thought that was really useful and insightful. So thanks for that today.
Thanks, Chris.
Thanks, everyone, for watching. Remember, if you have any questions for Sam, myself, anyone on the team, just reach out on those social platforms and we'll get back to you on those. We love that discussion. We love the engagement, and we really do read that and potentially engage with that when we're thinking about what to talk about and what news to report. So make sure you continue to do that. We really value it. That's us for today and for this week. So we'll be back next week with Alex, probably on Tuesday, to discuss all things markets and metals. Until then, have a great weekend, everyone.